please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, the sea of red, of course, continues. We have nothing, anything better to report. At the moment, the mild recovery that you saw on the Nifty has been sold into, and the market is rapidly racing back to a 300-point cut. At some point in time, we saw it as a 250 or a 230-point cut, but a 50-point cut has been added in no time. So the first minor recovery that you saw, if you can use that word at all, has been sold into, and in the mid caps as well. It appeared that we could see some bit of short covering. No such luck. The advanced declines ratio is 22 stocks in the red for 1 in the green. But of course, when we started, it was, I think, almost 40 in the red, 42 in the red for 1 in the green. But it's still a market roiled under its own weight.
Yeah, it's still as bad. I mean, banks are selling off further now. So if you look at the bank Nifty, it's down almost 900 points. But individual banks are falling a lot more. Yes Bank, Axis Bank, huge volumes as well, SBI, all down in the red.
Oh, absolutely. We have an earnings season which was actually quite flattering. Some stocks have come, some companies have come with excellent numbers. Among them is are the results from Sundaram Finance. That's very strong disbursement growth, improvement in asset quality, CV sales volumes showing about the strongest post the announcement of GST. To discuss the real economy now, we have the management of Sundaram Finance joining us, Mr. Srinivasaraghavan. The Managing Director joins us. Good morning, Mr. Srinivasaraghavan. Always a pleasure having you with us, especially since you bring good news, something that at the moment is lacking. You gave us very strong volume numbers for the quarter gone by, especially for the month of December. Has that continued in Jan? Should we expect a strong fourth quarter as well? You will have some idea of the volume demand.
Well, I think when we talked after the December numbers came out, we said that CV sales had seen a record surge and all of that. But I'd also sort of said, you know, there was a lot of pre-buying because of this mandatory AC and blower.
Yes.
So that has played out because of the pre-buying in December. January has been a little more muted. Lower numbers in January than you would normally expect. But for us, it's not a surprise because, you know, as I said, the pre-buying did soak up a lot of the volume in December itself. So January was muted, but our view is that, you know, February and March should be all right. I think nothing spectacular maybe, but we expect that growth will be reasonable. So we're expecting Q4 to be a good quarter.
Okay.
Not great maybe, but good.
Okay.
Mr. Srinivasaraghavan, in fact, you know, we were speaking with the management of Ashok Leyland yesterday, and they did mention to us that while February and March look okay, in the months of April and May, they're expecting some sort of fatigue in the market, buyer's fatigue. If that does take place, what kind of growth do you think you would manage to do as far as commercial vehicle disbursements are concerned? Do you think you've hit a peak, or could it, you know, get better?
Well, you know, this is something that we've been saying for a while now. You know, some of the buying has seemed irrational because, you know, trucks, as I've mentioned before, are getting bigger and bigger. So as the tonnage capacity increases, you have to wonder, you know, how much can there be in terms of unit growth. So I'd sort of said mid to high single digit, which is probably not that exciting for the manufacturers or for anybody else. But to me, you know, if we did that, we would have done very well, you know, because really capacity has grown massively because of these bigger and bigger trucks. And as we've said before, with checkposts, etc., going away, productivity of trucking capacity also is much better, you know. So those are factors to keep in mind. So I would be very wary of people saying, you know, there'll be 15% growth and 20% growth. I think we should shed those notions completely.
Okay, that's an interesting point you're making. By the way, the market is beginning to move back towards the low point, and this 9:30 to 11 normally is crucial period. So stocks like Jain Irrigation, Just Dial are beginning to have second round of selling. So just keep an eye on this space. So Mr. Srinivasaraghavan, good morning. In that case, what would be a reasonable assumption if you're saying that the numbers that you're talking about are unreasonable? What would be a good number to factor in now?
As I said, medium and heavy commercial vehicles, I think if you have anything in, say, high single digits, that would be great. But cautiously, I would say, maybe a 5-6% growth. I think that itself would be very good.
Okay. Mr. Srinivasaraghavan, you've also seen a fall in the troubled assets. Defaults have come down. Would you think that trend can continue, since if unit sales, unit output is higher simply because of tonnage and no time lost in waiting at checkposts? Would you see a meaningful fall in defaults?
Yes, I think that has been the case now for more than a year actually. So our asset quality has been very, very steady. As I mentioned to you on an earlier show, I think even during the worst of demonetization and everything else, our recoveries held rock solid, and that has continued. So we're now more than 12 months down the road from that time. And asset quality continues to be very good. That is not a concern.
Okay. I wanted to also ask you about the tractor segment, because we've seen almost a 20% loan growth over there on a quarter-on-quarter basis, if you measure it. And, so much emphasis on a rural budget, etc. Do you think the tractor segment could do better?
Yeah, I think it will. This year itself has been a good year for tractors. And, of course, on the budget side, of course, lots has been done, but you still have to pray and hope for a good monsoon next year as well, because that always has a big part to play in rural sentiment and rural buying. But hopefully, if that is the case, then tractors, I believe, would continue to show this strong growth.
Okay. Actually, we also invited a lot of NBFC companies today with a reason, Mr. Srinivasaraghavan. It is the cost of money. The bond markets are signaling that there has been almost a 1 percentage point rise in the cost of finance over the past year. Will that get passed on easily? Will your buyers take it?
I don't know about easily, but, I know what we have to do. We'll have to try and pass on as much of it as we can. And, we have to, because there's no point, doing business if your bottom lines are not,
but, yesterday, yesterday Bank of Baroda cut its MCLR. So clearly there is an anemic demand that is staring at the bank. So they will come into your sector for competition, won't they? Therefore, will there be a margin compression? Sorry.
Well, yeah, margin compression is part of our reality, and we just have to find ways to navigate around that. It'll probably be a little more sharp this time around, but that's been the case for the last 18 months or so, because there's been no action on the corporate lending front. So one bank or the other has moved into our spaces. So that is part of the business.
Okay, Mr. Srinivasaraghavan, thank you for stopping by and always speaking candidly to us from one NBFC to another. Ujjivan Finance posted a good set of results. In fact, the disbursement growth was pretty strong. There was an improvement as far as asset quality goes as well. Sudha Suresh, the MD and CEO of Ujjivan Financial Services, joins us now. Sudha, thanks so much for joining us. Good morning. I want to start with the disbursement growth. It was almost 30% this time. What kind of sustainable run rate can we expect in disbursements over the next few quarters?
Good morning, Sonia. And yes, this third quarter was excellent for us in terms of many parameters. Starting on the disbursements that we had, which was 2,134 crores during this quarter. This has seen a growth almost, over the previous quarter of 9% and almost a 28 to 30% growth year on year. We expect this growth to sustain because you see that during the demand period, our disbursements had come down in the initial first 2 quarters. But after that, we have already recovered back to normal by the Q2. And in Q3, we have posted a good set of disbursements. We do expect this run rate to continue in terms of disbursements, not only in Q4, but also in the forthcoming financial year.
Okay. Will there be any squeeze in margins because market money, wholesale money has gotten expensive?
Lata, yes, we have been seeing the rise which has come, but luckily we are able to hold so far, and we have seen our average cost of funds still coming down. We would have some more leverage maybe over the next couple of quarters, and at the same time we would also be planning to factor in what kind of increase in interest rates is possible, subject to the kind of increase we see in interest rates.
Okay, actually
overall we will still be able to hold our cost of funds.
Okay, your big contributor continues to be group loans. Whether you look at total amount, disbursement, or whether you look at returns. Is that group showing more buoyancy? Why is it that that is the only one that's growing? The others are largely minor contributors.
Yes. So we have reposed our confidence in the microfinance business, the group business, as you indicated correctly, and we have seen an excellent collection efficiency for the entire business that we have done since last January. So as we have indicated, our collection efficiency continues to be a robust 99.7% on all the disbursements that we have made from last January. That probably is also an indicator of the kind of confidence and trust that you have on this business. And in spite of many MFIs who were affected during the demon period, you can also see that their businesses have also started coming back to normalcy, though their collection efficiencies could be anywhere 98 plus. But Ujjivan as such has posted excellent collection efficiency. So the group business is robust, and we should be able to continue with that. However, as we have indicated in our guidance earlier, it is important for us, and we are focusing on the growth of the MSE and the housing business also. So you will see quarter on quarter. So last quarter, if you see, the MSE and the housing put together contributed about 4.3% of the total portfolio. And this quarter, you will see that it is contributing 5.5%. Yeah. And since the ticket sizes are also large in these two businesses, slowly these businesses will also grow up in their total quantum to the portfolio.
So what kind of a growth are you looking at just in the near future for the MSE business particularly? I mean, there's been about 26% growth quarter on quarter that we've seen. What can you do over the next few quarters?
So we will continue to see very impressive growth, one because the base is small, and secondly because next year we are well set to grow on the MSE and the housing business. So we could foresee that the MSE and the housing business could contribute as good as 10% or more, 10 to 12% of the total business in the next year.
All right, Mr. Resh, thanks a lot for your time today, and good luck for the forthcoming quarters. That's Ujjivan, stock holding in a relatively weak market. Everready is the other set of numbers that we have to address. Mixed bag, revenue growth was steady, but margins took a bit of a hit. Amritanshu Khaitan is with us now. Amritanshu, good morning. Good to have you on the show. So, bit of a concern on margins?
Good morning, Anuj. Actually, we are very happy with the performance. If you look at the gross margin, it's gone up by nearly 2%. The EBITDA margin contraction is more a quarter phenomenon because of our launches, new product launches in appliances and lighting. We doubled our ad spends in Q3, which is a one-off spend. It's not going to be a continuous spend in every quarter. So you will see in Q4 the EBITDA growth to be as high as maybe 35–40% as compared to last year. So if you have to look at the full year performance, we are on track on what we guided for.
Okay. What is the volume and price breakup in your revenues?
So if you look at the battery business, it's been flattish in terms of volumes. Flashlight grew by 7%. The LED business grew by 98%, and the appliance business also doubled. So we've seen very strong growth in our two new areas of lighting and appliances. Flashlights has been stable, and batteries, due to its dominant wholesale movement, we saw some disturbance in Q3, which should get evened out in the fourth quarter.
Okay, Amritanshu, hi, good morning. The last time we spoke with you, you had just gotten into the confectionery business with those fruit chews. And this time, you've also tied up with Universal Wellbeing, which is that South Korean FMCG company. And it's a big company over there. I want to understand from you what the foray could be in the FMCG space. You're, building bricks to sort of create a large revenue pie there. But what can we expect in terms of numbers?
So I think the confectionery business should add about 100 to 150 crores of revenue by FY20. FY19 is just the launch year. If you look at in terms of bottom line, it's a high gross margin business. So with virtually zero distribution cost, it will be EBITDA positive from year one. The JV which has been tied up is with the Indonesian company. It's not South Korean. They are one of the largest groups in Indonesia. This is a JV which is being set up to leverage their product expertise and leverage Eveready's distribution. It's a long-term strategy. It's not something which will contribute to numbers immediately. But in a 5-year period, I think this JV could generate revenues of at least 400 to 500 crores.
So what are the products that you're looking to get into now? Apart from fruit chews, are you looking at any kind of other spaces, particularly in the FMCG group?
On the standalone business, our focus will be on the confectionery category. Our launch is with fruit chew, and we will also enter the hard-boiled candy segment by end of the year. The joint venture, once finalized, will look at the Indian market and map out which products from the Indonesian company can be sold in India and which ones should be manufactured here using their expertise. And then we'll take a call. So we are still, I think, about 6 to 9 months away from disclosing the product groups.
Okay, Amritanshu, thanks a lot for your time today. The stock down 3.5%, but the market, I tell you something, the first stock which has hit the intraday low is Jain Irrigation. Just pull out the intraday chart of that stock, and this would be the crucial hour now between 10 to 11 in terms of individual stocks, because that is where a lot of leverage positions are. And you might see unwinding of some of these positions. So stocks like Jain Irrigation, Just Dial, these are some of the stocks that you would keep on your radar. But let's do one thing. Let's get an insight into dealing room chatter early in the morning. Nimesh, so it's down quite a bit, but what's the feedback that you're getting right now?
Hi, Anuj. So this next 1 hour will be very critical from a from a leverage position point of view. So maybe some bit of margin calls will get triggered is what I understand. So you rightly pointed out the stocks like Jain Irrigation. Some of the stocks which have rallied or bounced back in yesterday's trade and there were long positions, those will get squared off first. So maybe that's where the pressure will be. But from an institutional point of view, I'm not yet hearing panic selling yet. Yes, there is unwinding pressure which is putting a lot of stocks under pressure, but it's largely arbitrage funds looking to unwind in the futures market than actual selling in the cash market. In fact, in the first 1 hour of trade, there is some bit of buying coming from the DIs, especially in the large cap names. So maybe in the large caps, we'll see some bit of support coming in throughout the day from the domestic institutions. From an FI point of view, it's still pretty much mixed. Some of the passive funds are looking to buy, but the larger hedge funds seems to be looking to sell out or at least short the market at this level. So it's a mixed day in terms of flows initial time, but I guess next 1 hour will be critical for mid caps and small caps purely from a leverage position point of view, and some bit of unwinding might happen in that space as well. From here on, I guess, given that there is so much of pain in the global markets, the mood is a little cautious. No one is looking to buy at the first dip. So that's a feedback coming in. I guess, from a technical, 300 points fall in the Nifty. So maybe around the 10,000 level mark is when you will see some bit of buying emerging in the large cap and in the mid caps as well. But for time being, one, it's unwinding pressure, which is putting a lot of stocks under pressure. And the next hour will be critical from a leverage position, because that's where some bit of unwinding might happen, given that some of the NBFCs may sell their stocks which are actually in the leverage position. So that's something to watch out for in the next 1 hour of trade.
Okay, Nimesh, yeah.
1,000 gone on the Nifty, Sensex today, 3,000 gone since the highs. 36,450, right, was the height.
The high that we have.
So now we are seeing about a 3,000 point cut on the Sensex. On the Nifty, it is still 8%. So about 800 points gone from the highs,
yes,
which was not many days ago, a week ago or 2 weeks back.
As we just discussed, we are still perhaps year to date positive, or maybe now,
No, now we are negative.
Now getting year to date negative, but even for Dow, we are not even at the levels where we
now
were.
we are 1.6 negative for the year.
Yes. Okay. So the statements from Finmin officials, SEBI keeping close watch on stock market decline. That's the statement that we have. Of course, it's all normal.
And not to be blamed on the LTCG. I don't think the markets are a victim of LTCG. Now LTCG has become, or the budget has become a victim of the markets.
Exactly.
It won't get the LTCG.
Exactly, it won't get LTCG. That's for sure. Because 31st January, I don't know how many stocks will go back to those levels. The problem is also in stocks like HDFC and HDFC Bank for last 2 days. There's been relentless selling. Yesterday, for example. And today it's continuing.
I would assume, is it related to FII? I mean, the FIIs will sell.
It looks like that. So obviously it's that. And, so HDFC Twins yesterday also put quite a bit of pressure on the market. And even while the mid-caps recovered yesterday, because these two stocks were down big time, they kept a bit of, sort of cap on the index. And today also that's happening. So these stocks are putting quite a bit of pressure on the market. But the mid-cap index is the one to watch out for now. 1:25 on advanced decline.